For TraderInsight.com, I'm Adrian Manns, and it's time for your daily dose of the doctor. We had a gap open in the markets this morning, and what that left us with was not a whole lot by way of opportunity in terms of the trading plan, but it did wind up sending one of the stocks on the S&P 500 up 2 standard deviations, and let's have a look at how we handled that position. So here it is. It was WBA. We see it on the spreadsheet here. Walgreens Boots Alliance Incorporated, ticker symbol WBA. This one sorted up for us based on this gap right here. We had a move from yesterday's close at $85.91 all the way up to $90. That met the gap qualifier of $4.09 and then some. So we had a Baltimore chop short entry in the first hour trading pit this morning. Let's take a look at how this one played out. You can see my executions on the chart here. These are overlaid by Realtek, of course. It plots these so that you can sort of evaluate where your executions happened over the course of the trading day. We see that in the first bar of trading, we had this gap move to the upside. This is where we got the signal from. This move from here to here tells us we have got a 2 standard deviation move, and now it's time to watch for an entry opportunity. In this case, the second bar of the morning, the second 5-minute bar of the morning, moved higher, and right at the close of the first bar, I took an aggressive entry on this. This is this balloon here, and we see that we had a move from that 88.86 entry that got down in here, and we see that these shaded areas here represent where the trade was exited. So now, why did I exit at that level? So some of the guys were looking for a move down to that pivot line. Based on the wide range bar of the morning, what I suggested was getting out at an expansion that took us down to that 88.05 level. Once 88.05 was hit, the stock continued to move just a little bit lower, got down to 88 even. When it started bumping higher again, I went ahead and just exited as quickly as I could. And we see that I got out, and on that bounce, the other thing that I did was picked up some shares, reversed the position to a long, and just caught that bounce back up to the upside, and then exited again for another few bucks on the trade. Could have been a nicer move, could have been something that, popped higher all the way back up into this closing range of the first bar. That didn't happen. So if you're going to reverse them, the important thing is to remember to get out quickly. But that was just one of the opportunities that we found in the first hour trading pit this morning. For all of you who are following my opening gap strategies, I hope that helps you make sense of it. If you do have any other questions, shoot me an email, adrian@traderinsight.com. I hope you had a great trading day on Thursday and an even better one on deck for Friday. The best trader education anywhere, only from traderinsight.com.